Welcome to the Fintech Ki Baat Dil Se podcast. This is on the Gyan from the Pelwan side. We have Vineet Tyagi with us today, who is the global CTO of Biz2X. Sir, over to you. If would love to hear a very brief introduction about what you have been up to and what your journey has been like.
Sure. Thank you, Sagrika, and glad to be a part of this podcast. Great to be connected with your audience as well, who are listening to us today, wherever they are. And just introducing myself and about my company. So I represent Biz2 Credit and Biz2X. So Biz2 Credit has been a pioneer in setting up the digital lending as a space in US. We began digital lending in 2011 in US, focused on SME market when this word was just very nascent. So we had no branches or a vision of no branch, no feet on the street kind of a lending. And happy to share, as of last year, we completed this journey with about $5 billion of digital lending done in US last year. The technology that we've created, Biz2X, is the brand name for that, and we offer that across the globe. We are live with 30 plus financial institutions and banks of different sizes across the globe, in Canada, in US, in India, as well as in Australia. We have a large commitment towards making the SMEs of India Atmanirbhar. A special initiative called Madhyam has been launched, where we are investing in providing the technology and credit rails for connecting SMEs through industry aggregators to right choice of lenders, and providing almost near real-time access to credit so that SMEs everywhere of all shapes and sizes can grow their business with timely access to credit. A bit about myself: I've been a technologist, 28 years in the industry. Have had passion since day one about building and scaling systems. So worked hands-on um, as a technical person, rose through the ranks and did my own stuff, architecting some big systems. Notably, I built the world's first EDI booking system for one of the largest shipping companies that went global. Worked with large healthcare payer provider insurance products, built and scaled them, and have built and scaled companies with products over the last 10, 12 years in India. And I currently lead Biz2 Credit India operations, Biz2X India operations, and I have the global responsibility along with my team for building the products and running the technology for Biz2X and Biz2 Credit.
Thanks, Mr. Vineet. That's such an interesting journey. More on the journey side itself, I believe that, like you rightly mentioned, you started with the whole Biz2 Credit or Biz2X side very, very long ago in 2007-8ish, right? And back then, fintech was not an industry that it is right now. So what was the main inspiration for you to start something like that? Where do you see the gaps and how did you come about it?
So our first generation of our company actually predates, our first version of our vision, as I would call it. Biz2Credit started off as a competitor business model in 2007, 2008. And at that point in time, our vision was to, focus for SMEs in US market, give them a web resource and an online resource where they can compare what options they have for different types of credit, and then do the matchmaking and then kind of ease the application process for them so that they get connected to the right choice of credit for themselves, and have that whole application process simplified and digitally done over the internet. And when we were doing that, we were stupendously successful in that. But what we also realized was that we were depending on lenders and the lender back office to pass on these applications to them, and these banks and financial institutions who were the lenders used to take forever, and not naming names, but sometimes even 60 days in order to decide upon an application. From a customer experience perspective, it was very bad customer experience, and we were getting hammered because of that, because the customer was our customer. They came to us recognizing our superior experience delivered to them through the internet, online, in their homes, but then we were not able to deliver the ultimate experience, which was getting them the loans. So what we realized was that if we have to do something about that, we have to really shake up this back office operation of lenders. And the best way to do that would be, why don't we ourselves become a lender and show the world how digital lending should be done, and a pure digital lending, meaning no branches, no feet on the street. So we literally kind of rolled up our sleeves, raised some investment, and we found good investors who saw our vision to be different, to be pioneering in this, and invested in us at the right time. So we raised a Series A from Nexus Ventures partner, and we used that money to kind of really build out the technology over the next 2-3 years to really scale up our business. So I think that journey has been from that moment to becoming a digital lender, to really proving out the technology, to building our technology when none existed, sometimes to support our business vision, to really today when, because of COVID, everybody's gone digital and there's a lot more acceptance of digital in the business.
I think this is definitely brilliant. I mean, from identifying the problem that exists with the legacy systems of banks and NBFCs to basically rolling up your sleeves and saying कि यार ये लोग से कुछ हो नहीं पाएगा, let's show how it's done. And then from being a tech player to completely getting into the business side and starting a book of your own, I think that's a really interesting journey. So if you were to put a finger on one thing that probably, I mean, this entire gap essentially is what inspired you. Ki the entire mechanism was not efficient, and you were essentially firefighting with your customers because of their inefficiencies. But if you were to put a finger on one single point that made you pivot from, not pivot essentially, but expand from a pure tech company to essentially becoming a lender, what would that be?
So I think the one single point, it would be difficult to say that that was a singular turning moment, but definitely it was because we were hitting a glass wall or hitting a scale. On one hand, our customer experience was flawless and customers were happy with us, but they were unhappy with us in the sense that we're not getting them the loans. And our promise to them was to get access to loans faster. And so the whole user experience for us was diminished because we were not in control of the last mile or the last few miles, so to say. And that was one we realized when we actually spoke to the lenders themselves in order to bring efficiency to that. And we saw the archaic back offices and just the reluctance to change. We saw an opportunity to disrupt.
Right, definitely. So, I mean, this was probably, let's say, almost a decade ago. But now, when you look at the system that you're working with from the banking side as well as NBFC side, do you see a drastic change in the way they handle customer experiences and their back offices, or is there still a fragmented journey which has these gaps?
It has definitely come a long way. So I wouldn't say that we are still there and the back offices or the financial institutions haven't improved. They have, and they've made a lot of progress. One thing that I can share from a lot of experience, and it's pretty much not just Indian, but global, and everybody across the globe is being plagued by it, is that all the digital money has gone in the front office. When I say front office, it's your customer facing user experiences. So where you're touching the customer, you have improved that. So there is a far more easy, access to information, far more easy access to apply, far more easy access to insights and statements and whatnot. But the eventual back office or the mid office is still your same legacy. You have kind of improved your shop front. You have a very sexy and glamorous show window that excites, but inside your production still remains the same. And that's worldwide still, and that's what our Biz2X technology is helping. Our Biz2X technology is the same technology that's powering our US lending business, which we used, to do $5 billion last year. We've given it to 30 banking partners, and happy to share with you that it's a phenomenal success. They have run through about $20 billion of origination, underwriting, and servicing through our platforms. That's
That's
about
brilliant.
1.5 lakh crore rupees if I were to put all of this together.
Got it. That's definitely inspirational. So since you have been in multiple markets, and I think you have seen US, Canadian as well as Indian market for almost more than half a decade now. So how do you see, like you have seen the evolution of the entire from the traditional lending to the now instant credits and all of those pieces, right? So how
Yeah.
have you seen the let's say evolution first in the uh, supply side of the piece, wherein how have you seen the lenders evolve, and how have you seen, let's say, the demand evolve over a period of time from the consumer point of view within these three global economies?
Sure. So lenders definitely have evolved. I think their systems are evolving. I think there are two sides of it, right? The assets
Mhm.
and the liabilities. So on the liability side, there is a far better improvement and more self-serve. Even COVID-driven digitization, because branches were set, kind of inaccessible during COVID-related shutdowns. So there's a complete digital transformation. So and so that even banks have started questioning now how much branch load they need to carry, and do they really need branches? And world over, the push is for digital banks now, or pure digital banks which just exist in the cloud.
Mhm.
I think that's done on the asset side of the business, where, and talking about lenders now, uh,
Right.
there is still a lot of work to be done. Progress has been made, like I said, on the origination side. A lot of progress with the customer experience, customer connect. There's a lot of data that's digital native now, that banks can collect and speed up the process. A lot of APIs. They themselves, a lot of technologically leading or thought leading banks have opened up, created open banking APIs to enable fintech partnerships, and that's going well. But that's still focused on origination. In some
Right.
sense, the back office still is the bank. And if you look at it, and I wish I can draw a diagram, but if you just visualize this,
Mhm.
it's a funnel. You have a funnel, and your funnel is getting bigger and bigger, and your catch
Mhm.
becomes bigger. You can pour more water in the funnel, because,
Right.
and that's your front office. But if your funnel's outlet is small, then it's inefficient. It's an inefficient funnel.
Right. You create a
Catch
bottleneck.
more water than you can actually deliver, and that is leading to the back office being inefficient. Now they have to scale up this business as they have scaled up the front office, so you can deliver access to credit and decisions much faster. And that's not happening on the SME side, on small business side. Business loans are still taking time. Without naming names, I'll tell you, we are working and we have deployed in production one of the largest banks in India on the commercial lending side, where
Mhm.
they are helping the medium size of these small businesses, a little bigger ones, scale up to the next level of growth. They used to take about 10 to 14 days to underwrite a file. And it's
Right.
not that they didn't have technology, they had technology. They had
Mhm.
all the data sets and everything. Now with Biz2X, they've cut short that timeline to under 24 hours.
Oh, wow. That's brilliant. So I personally have worked with, let's say, a couple of banks in their trade finance and working capital, specifically on the working capital piece as well. So when I've seen the life cycles over here, the lending life cycles from origination to disbursement is usually 30-35 days for, let's say, mid corporate size, right? Around anything below 100 CR kind of a
Right,
turnover
right,
company.
right.
That's around 30-35 days is what is a turnover time. So, I mean, and most of that, for the majority of that time, I would say for 60% of that time, the file, as we term it, is essentially been unattended. There is no one working on it. It's just sitting in a pile on an underwriter's office, and he gets to it within a couple of weeks, and that is when it's been pushed forward. Then again, it gets to the admin, and it again is stuck there for a week more before actually being disbursed. So how essentially is this process being optimized, or what systems have been brought in to basically, make this more efficient? Because we have seen a lot of efficiencies being created when you talk about instant loans in terms of B2C or direct, retail customers kind of a scenario wherein there are now instant personal loans and instant EMIs and all of that. But why has this segment specifically been lagged behind, the SME segment?
So, I mean, there are a couple of things, and I can share some examples. So, if you look at things, our ultimate goal is to bring straight through decisioning and straight through processing. Now, straight through processing cannot happen without straight through decisioning. And I'm talking about SME loans. I mean, as you correctly pointed out, Shreyas, I think the norm today is that personal loan side, and that is pretty automated, simpler underwriting, better connected data sets and whatnot. Now, what stops these banks, and what takes up to 30 days for them to take decisions and then to move the progress? What we've seen is that preparing a CAM requires a lot of reaching out into different systems, and there is some complexity associated with processing of that data, because you may not have digitally native data, i.e. APIs to connect to for every data source.
Right.
B, if you have customer supplied documents, that's digital documents, but it's really not digital data, because you can't consume that and run models or do stuff with it. And see, there is a time lag between the customer himself being able to provide that data in a timely fashion. So these three inefficiencies were what we really understood and have gone after. And we've created solutions for each one of them. We've deployed and built up several data sets, AI models, ML models that allow us to read paper documents, convert them on the fly into digital data, feed them into our models to take decisions. So effectively, instead of relying on a human chain to create a CAM that results in the underwriter taking the decision, the system itself creates the CAM. So the system becomes the maker here of the CAM. The underwriter is the approver. And there could be some more checker from a perspective of if the loan ticket sizes are higher, so there may be a hierarchy of decision making. And these decisions are not just straight through decisions of like how much you'll get in terms of money. There could be in terms of price. We have risk adjusted spreading tools that can figure out what price should be offered to this customer. It suggests terms, it suggests steps. So we have models, and we have lots of data that had backed up from our lending experience and given us the ability to create these models, which then can be deployed with confidence into a back office process and convert this system into a system which then automatically takes a decision and keeps the workflow going. So the file, as you pointed out, Shreyas, never waits.
Right.
It's continuously moving because the system is automated that. It says you are not supposed to be spending 24 hours in this step, and there has been 24 hours. So there are material alerts and escalations that immediately start happening in the workflow.
Understood. So what kind of data sources have you been able to integrate to essentially utilize those AI/ML models to basically assist underwriter in taking a better decision? Are you essentially providing data sources, or are there other plugins that you have that essentially enable or enrich the data for the underwriter?
So we say that our expertise is not in sourcing data. Our expertise in interpreting insights from the data. As long as somebody can get us access to any data, we're willing to partner with them. So we partner with data providers, third-party data providers, databases. In many cases, we develop our own data provisioning capabilities. But ultimately, what we have realized is that on the SME side, it's all about cash flow. And these are the as we say it, our chief risk officer says it, that the top three things in determining a credit worthiness of a small business is cash flow, cash flow, cash flow.
Agreed.
And the better you can understand the seasonalities, the cash flow and whatnot, the best it is. Now with the GST data in India, with the bank statements and everything being digitally available, we have been able to actually automate that, and we can actually derive a good proxy P&L for the business and his cash flow out of that. But since we were talking earlier about supply chain, financing, and other areas, what is happening now is that there are a emergence of small business behaviors, which is that the cell phone, the mobile revolution in India has leapfrogged. So small business owners today are not well aware of how to use the internet, but they're very savvy in using the mobile phone and the mobile technology,
Right.
including for documents, for just about everything. So what we realize is that there is a lot more alternate data that exists through payment providers, through industry aggregators, sales purchase data, POS systems, the ledgers which have come up. So there's pretty much an app for just about everything that a small business needs to do. So these data sets are now becoming more digital native and accessible easily to take credit decisions on a small business. And more importantly, cash flow can be better understood by some of these things: your sale purchase history, your how much you buy, how much you sell. If you're, let's say, in a business of ice cream selling or cold drink selling or something that has seasonalities, then you can understand these seasonalities much better. You can understand the macroeconomic of that industry type much better through these alternate data sets. So what we then provide are models that allow you to use these data sets to make automated decision tools. So as I said, that we are providing you the right technology and the credit rails to make the decisions using the data that you need to have. And we can use just about every data. We are open and continuously improving our data integration capabilities.
Understood. So if you were to essentially draw parallels between the US and the Indian economy in terms of availability of alternative data sources and how authentic or how solid they are, what would your observations around the same be?
May not be surprising, but India is far more digital native now than US, and it's a very happy moment for me to say that. Although, and that's the true patriot in me speaking. But I think because of the mobile, leapfrog we've done, and there's a lot of age. Kind of credit we have. 50% of our population is below 24 years. So because of that, a lot of the small business owners are also actually pretty young and savvy, technology savvy, much more technology savvy. So we've seen that there is a lot more data available of this sort, a lot more useful data available in India than I would say related to US. There's no equivalent of even GST data in US, by the way.
Yeah.
Over to you, Sagarika. Do you have any follow-up questions?
Not follow up exactly, but I think I picked up 2 points from what Vineet was mentioning in the earlier question. One was the point where you talked about the cash flow issues and the fact that you are mastering and interpreting the data. These 2 points immediately led me to think about the not so old COVID times where I personally feel that these small businesses were vulnerable during this time and were actually facing a lot of cash flow issues, right? And in this period, I think quite a lot of people were looking towards opening up credit lines for their businesses, but at the same time, I think it's very difficult for a lender to kind of lend in such difficult times, right? So particularly during this time, how did you fill in the gap, and how has probably interpreting data and analyzing things or taking help of alternate data helped out here?
That's a good question, and that was a tough time for small businesses globally in every country. There have been lockdowns and slowdown of business and whatnot. So I think what we fundamentally done was that there are certain macroeconomic and factors which cannot be held, which can so for which small businesses and their downturn cannot be held responsible in their business, because there is a macroeconomic downturn, right? So you can't blame the business for having that downturn. So it's but natural that some macroeconomic tolerances had to be created in our models, and we had to have non-aggressive collection strategies, and although even the governments were supporting, and they were taking into account and bringing support programs for the lenders and the small businesses. In US, there was the Triple P program where the US government was supporting the small businesses by paying them or giving them subsidized loans, or rather grants for running their payrolls and whatnot. India was giving credit guarantees and whatnot. So, leveraging such programs to kind of go into supporting was one element of how we supported these small businesses. Second element, as I said, was not to be aggressive on the collection strategy, because there were moratoriums, and to give moratoriums to small businesses to understand and have the empathy that that this downturn is affecting all of us. So it's not their fault. It's not their business has gone under. So let's support them during the tough time by not levying penal interest, or if they're a slow payer, going a little easy and giving them moratoriums and so on and so forth. And then working with them to grow their business as needed, and as the business comes back after COVID, then as the restrictions started going away, or as the world started kind of living with COVID, and kind of getting over it. The third thing that we also did was that, like I was mentioning earlier, we tweaked our models to not have a bias or a penalty for these macro conditions, to ultimately, I wouldn't say ignore, but to not negatively penalize, credit worthiness of the small business for their future needs based on what happened during COVID. That's some of the things we had done.
That's quite interesting. Another question that I had was, I think, by the way you explained the previous question, I just assume there's a lot of efforts that goes into putting things in place when it comes to offering credit lines to small business, right? And I particularly remember just a few years back where very small businesses that I come across were kind of hindering to take the credit at all to run their business, right? And fast forward to now, when I think millennials like us are probably taking a rock show concert tickets on credit as well, right? So how have you seen the journey of this transformation in India specifically happen, and where do you see this going?
Yeah. Now, this is transformational. India has the age credit that's working for us, and like I said, I shared the statistic. It's surprising for me, when I came upon this, that not just 50% of our population, or even more, it's actually 54 or some percentage, which is below 24. 80% of our population is below 44. So we're actually a pretty young population, and there is a generational or a couple of generational changes in behavior that has happened. And a lot of the people in the world have got into behaviors. So specifically talking about India, we just within 10 or a decade or two, 1.5 decades have moved from being the world's largest saving driven culture to perhaps we will be one of the largest spending cultures in the world soon. So that change, is a golden opportunity, because that provides a lot of opportunity for innovative models of finance to emerge, and that's what pretty much needed for these use cases, some of these newer use cases to, become real. When there is a need, solutions will emerge. Otherwise, it's all
Okay.
just textbook and academic research. So
True.
what has happened really, if you were to pin it down, is that there is the society and the generational change that's making some of those financial use cases, much more real right now, because it actually solves a problem. A simple financial use case like everybody needs a laptop, and the government is giving laptops as a scheme to all the students in the state. But how do you ensure there is no misuse of funds, that the students don't take that money for the laptop that the government is now digitally ensuring through a DBT scheme to go into their bank accounts? They don't spend it on buying a bike.
Mm-hmm.
A simple financial use case, a pre-loaded card with which you can only buy, computer goods or computer or a laptop or peripherals that go into a laptop. So, I mean, these kind of innovative use cases, and there are millions of them that will become real because of all this generational change. So it's very exciting. I feel we're living in the best times now.
Yeah, that is pretty exciting. Shreya, over to you if you have any questions.
Sure. So I think there's one last question from my end. I just wanted to understand what has been, since you have been integrating with a lot of data sources right across the globe for underwriting, what has been the most unique data set that you have come across that have actually made an impact on the underwriting decision?
That's an interesting question, Shreyas. I think every day we discover something or the other, because the way, at least because we're not looking just to solve problems. I think we are, but we also continually look at data, that we have, and we have data for, millions of, small businesses across the globe. So on a non-PII perspective, we're continuously looking at it and just looking at what more can the data tell us. So from that perspective, what I can share with you is that one of the most recent and interesting things that we have found is that the fact that how you pay your EMIs, on what date you pay your EMIs, has a very tight bearing on whether you will default or not.
Okay, that's interesting.
And that's very surprising because it's not intuitive. Whether you pay EMI on 1st or 3rd, if you're supposed to pay your EMI on the 7th, if you pay early, that shouldn't mean you're defaulting.
Right.
But our data has shown that when you pay, and based on your 3 payment behaviors, my algorithm now, we have an algorithm, an AI algorithm that can predict with 85% certainty if you will default during the lifetime of your loan. And that's one of the most surprising things that I was.
So this is, I think, more of a behavioral psychology kind of a piece, right? Wherein if a person is constantly paying just on the due date or a day before it, that could probably have a direct correlation with him defaulting, or maybe a risk of defaulting in the future.
Correct. And this not related to this, but another insight that we got was also non-intuitive, was the fact that when you fill in a loan application, at least digitally, to kind of have the whole experience, customer experience, more engaging, you begin with asking the customer, what's your revenue, right? So that's called the customer stated revenue. And then you actually compare it with whatever you discover, the factoring you put on it and risk adjustments you put on it. We've seen that the risk of default doubles if you have if your stated revenue and your actual revenue is in the ratio of 1:8, 1:0.8. So if your stated revenue is, if your actual revenue is, as we found out, was 20% or more lower than your stated revenue, your risk of default actually doubles at that inflection point. It's not a linear correlation.
Oh, That's interesting. So again, I think this could probably be a more of a behavioral psychology kind of a parameter wherein the kind of answers that the person gives while filling out the loan application speaks volumes about the kind of mentality that he's coming into this play with in the first place.
Yes, it can be behavioral, but see, it can be unintentional also. You can have penalizations about this. So at the time of origination and underwriting, before you are taking these credit decisions, having these insight abilities gives you an opportunity to then go back and ask the customer.
Right.
For example, I've again not naming names. You go back in one case, we went back to the customer and says, "Why does your revenue?" And it's the customer relationship manager. This was in US, so went back and asked that, there seems to be something. So have you not disclosed something or what's going on? So he said, "Yeah, I have another bank account where my credit card receipts come in." He said, "Why didn't you disclose that?" He said, guys didn't ask me. If I had the opportunity." So it's not behaviorally, intentionally, he's kind of trying to fraud or game the system. But what it does is it gives you an opportunity to connect more with the customer, understand his need, be empathetic to him, and engage deeper so that your credit assessments is much more connected. So just one example that, these kind of tools and behaviors, while are guiding us, but they're not just guiding us and saying behaviorally negative. It's just an engagement tool. It gives you the opportunity to go and say, "Do you have another bank account?" And he said, "Yes, I have." And when we connected, it just lined up perfectly. It improved his credit assessment scores, and we could give him what he wanted.
Got it. I think that's really insightful. I think that covers it all for us for specifically this conversation. I think it was really really to have you here and talk about the deep dive into the lending piece and specifically talk about how the back office needs more optimization and efficiency and how you guys are probably leading the charge in India. It was really great speaking with you, Mr. Vineet. Thank you so much for joining us.
No, pleasure, Shreyas. Pleasure, Sagrika, for you to have me on the podcast and to be able to connect with your audience.
Thank you so much once again. It was a pleasure having you. And thanks a lot, Dishant, for coordinating this entire piece.